All right. Well, good morning, everyone. Welcome to another week of exciting trading in the Forex market. Last week we had a lot of fun with Greece and all of the nonsense that's going on there. I was reading an article earlier in the week that basically said that the majority of of negotiations and what have you was pure idiocy. And even now, as you may already know, the Greek issue has been agreed upon. But what does that really mean anyway? Well, this morning, the President Donald Tusk of the European Union basically put out this statement and said, today we have only one objective: to reach an agreement. After 17 hours of negotiations, we have finally reached one. One can say that we have agreement. Leaders have agreed in principle. Now, these are the really telling items. They have agreed in principle that they are ready to start negotiations on a ESM program. Well, the ESM is the European monetary program that they are trying to get Greece into here, a third bailout, basically. But you notice it says agreed in principle about starting negotiations. All right. And he goes on to say that these are strict conditions to be met. The approval of the several national parliaments, including the Greek parliament, is now needed for negotiations on an ESM program to formally begin. Well, what's been happening over these last couple of months? Nothing, really. They've just been barking at one another and calling one another names and really accomplishing absolutely nothing. And even now, with this quote-unquote agreement, nothing has been finalized. And the drama plays on. We're in Act 2 now. And the biggest issue that's facing a true agreement is that all of the parliaments buy into Greece's third bailout. That includes the Greek parliament and the other 19 countries that are part of the Eurozone that have to agree, because it has to be unanimous. And one of the biggest issues that Cyprus is going to have is to get his Greek parliament to agree, because in Greece, the no referendum was on a set of conditions that the European Union was putting on Greece that they did not agree with. Well, this new set of conditions is even worse than the previous one, as far as being extremely restrictive and much more, including much more austerity than the previous agreements, to the point that they are setting up a $50 billion asset company in Luxembourg, Germany, that will be independent of Greece, but it will include Greek assets that can be sold in case Greek defaults on its promises. Nothing was really settled yet, so the Greek drama continues.
Sounds like they're throwing good money after bad.
Yes, they are. So let's take a look at the major news events coming up this week. Last week, obviously, Greece was the biggest issue, but the Federal Reserve also came out with its meeting minutes from its June meeting, showing policyholders were concerned about Greece's debt crisis and expressed caution in general. The rate hike is not going to come anytime soon, in my estimation. Looking forward, poor news that came out for manufacturing particularly, and non-stellar news in other segments of the market in the U.S. has given the FOMC pause to reconsider the timing of their next rate hike. And I would suspect that it wouldn't come till next year at this point. Now, a lot of people are saying September, maybe December, but even the IMF has chided the U.S. that they need to hold off till next year. So it'll be interesting to see what the FOMC says about that. All right, so coming up this week then is quite a number of items, about 15 of them I have on my list. And they're spread out all over the week, but the biggest days are Wednesday and Thursday, and the biggest news is coming out of the Eurozone and the U.S. The rest of them are moderately quiet, and particularly today, there wasn't a lot of news to drive the market, although when the market opened, I expected considerably more movement in the market. But it was interesting to note one of the negotiators from Belgium came out and said, we have an agreement, and all of a sudden the euro took off and popped up about 50 pips or so, only to be reversed within a matter of minutes. And so the euro is continuing short today, I think. It was while I was in the European session, at least. So this morning, then, we've had some news come out, but the big news of the day is going to be the Eurogroup meetings, and which are continuing, and the Bank of England Credit Conditions Survey. I haven't had a chance to read that yet, but it gives, those two items are the two items of the day that are the ones to just keep note of. I've got to go back and read that condition survey. It literally lays out the credit condition of the country and how the Bank of England sees credit going forward. So it's more of a forecasting item than it is a news item that can really be traded. Going into Tuesday, German ZWE economic sentiment, and you'll notice this one here, which is ZWE economic sentiment, but it doesn't have the word German in front of it. That means it's for the entire Eurozone, all right? And both of these are expected to drop some, and that's because of the Greek situation going forward. Even before that, I'm going to point out a few things to kind of keep in mind, even though they aren't the highlights of the week. In the UK, there are 5 items coming out. These times, by the way, are GMT, Greenwich Mean Time. No daylight savings applied. So in tomorrow's European session, we're going to have a slew of data coming out for the UK in regard to CPI numbers, inflation. And they're all supposed to be a little better, and it will remain to be seen whether that's the case or not. as I mentioned in the European session this morning, pound CPI, for instance, prior to this number here, which was last month, the prior month to that was negative. And everybody got all excited when it jumped positive. That's not necessarily going to mean that it's going to stay positive. It could just as easily jump to negative, because a lot of CPI numbers that have been coming out lately has been in that direction. So that's a very tradable item if that number comes up deviated substantially one way or the other. So watch the pound tomorrow morning, but the bigger issues are going to be, or the bigger items are going to be economic sentiment, and going forward into the day, core retail sales are going to be the other big one for the morning. Americans increased their spending at retailers in May, buying more autos, cars, and building materials in particular. Retail sales rose a seasonally adjusted 1.2%. After a mere 0.2% in April. Including the job market continues to improve, or I should say indicating that the job market continues to improve, increasing store sales. However, despite that, sales have been fairly tepid, very moderate, and you'll notice even a decline is forecast for this time around. Not a great indication of a growing, vibrant economy. So again, giving the FOMC pause to potentially push back the time of interest rate increase. All right. Now, there's a lot of red ones that you want to pay attention to, despite all of the ones that I'm are apart from the ones that I'm talking about this morning. For instance, on Wednesday morning, we're going to have Chinese GDP. It's expected to drop. Industrial production is expected to drop. Fixed asset investment is also expected to drop. These three is going to push the Aussie around quite a bit. So you want to keep any Chinese news in mind for two reasons. One is if you're trading the Aussie, it's going to have a direct effect. Secondly, it's the second biggest economy in the world, and it not only affects the Australian dollar and the Kiwi, but it affects just about everybody on the planet. So the contraction in the Chinese economy has been gradual, but it is continuing. This GDP number is most likely inflated. One analyst puts the actual GDP at roughly 3.5% for the entire year this year. So 6.9 or 7% is way overstated, I think. And of course, we've had a 30% drop in the Chinese stock market over since the beginning of the year. Everybody was applauding on Thursday and Friday because the stock market had rallied some. Well, it only rallied because of the massive amount of support that the government put out in order to try and prop it up, literally telling the major companies and the major stockholders that they can't sell stock for the next year, and they better buy more. In essence, they're holding a gun to their head and saying, you better increase your holdings so that it props the market up. Not a real good way to run a stock market, or not a good way to run your economies or your country's economy when you're trying to get the rest of the world to accept you as a reserve currency. That's their ultimate goal, but they're not doing a very good job of it right now. So any Chinese news that comes out, you want to pay attention to. All right, going forward then, you'll notice monetary policy statement and Bank of Japan press conference concerning their quantitative easing program. They're going to continue to expand their monetary base, which means their debt, but at the rate of 80 trillion yen a month, and increase the frequency of its economic outlook reports to improve transparency. The recent slowdown in exports poses risk to economic growth, but Governor Kuroda, the governor of the Bank of Japan, said that inflation remains on track, but it's a different track than they started out looking at. Because initially when they put in the quantitative easing program, they were looking for 2% in 2 years. Well, 2 years has come and gone, and they're nowhere near 2%. So they've extended their timeout, and it actually lowered the targets a little bit to try and put in more credible targets going forward. So, but the bottom line is that the central bank chief reiterated the fact that Japanese economy is recovering moderately, and it is. The Japanese yen has appreciated substantially over the last couple of months, and only this last week has it had a correction. But I think ultimately it's going to finish its correction and continue long for a while. All right, going forward then, we have the pound, the UK employment data, made up of average earnings, claimant count, and unemployment rate. All of these are anticipated to be better. If that's the case, the pound will rally. So be watching that. That's a very tradable event coming up on Wednesday. Going forward from there, going forward from the UK unemployment or the employment data, we're going to have the U.S. core PPI and PPI numbers. Producer price index edged up in May by 0.5% compared to a minus 0.4% in April. On an annual basis, that works out to an inflation, a headline inflation falling by 1.1%. May's rise resulted from a broad-based increase in energy prices, particularly despite the fact that oil prices have come down some. Energy prices in the U.S. have risen, and all you have to do is go to the gas station and fill up your car to know that. Analysts expect that higher pipeline inflation pressures could induce the Federal Reserve to hike rates earlier rather than later. So this is going to be watched, and it's expected to rise this time by 0.2%. So that's, again, any deviation from market expectations, is what really causes the volatility in the market. So keep that in mind. Going forward from there, we have a lot of Canadian information coming out. The rate decision, Bank of Canada's monthly policy report, rate statement, and overnight rate. I doubt whether the rate is going to change at all. Pelose, the governor of the Bank of Canada, is quite conservative when it comes to making changes. But the thing you need to keep in mind is when he does make a change, he doesn't tell anybody. He just does it, and it surprises the market. So keep an eye on what this does come Wednesday, because of the slowdown in the economy, the bad employment numbers recently, and oil dragging the currency down, he may in fact be forced to at some point change the overnight rate by a quarter of a percent. We also have Janet Yellen speaking on Wednesday. She'll be testifying before the House Finance Services Committee in Washington on the semi-annual monthly policy report, she may speak about the reasons for the Fed's decision to postpone the rate in June, because that was one of the time frames that had been purported to be a possible rate increase month, but it didn't happen. And she may suggest a possible timeline for the first hike. I doubt it. I think she's going to be as non-transparent as possible, because putting a real timeline out there makes the market more confident in doing buying and selling. Without a timeline, the investors tend to sit on the sidelines. So any change in her rhetoric regarding timeline is going to be watched very carefully. Any talk of a rate hike will rock the markets. With September, as many analysts believe, is the best chance for a hike, but because of more recent issues that have come up, particularly with the IMF stepping in and asking for more time, I think she's going to take a much more dovish stance with no set time for a rate hike. All right, those are the big issues. One that we don't talk about much, but is really important, is this GDT price index. That's Global Dairy Trade Price Index for the New Zealand. New Zealand's a heavy commodities exporter, particularly in the soft commodities such as lumber, dairy products, food, sheep, things of that nature. And this global dairy trade auction happens every other week, and it's been negative for 2 months now. A further negative reading coming up on Wednesday would drive the kiwi even further south. So watch that one carefully. All right, let's move on to Thursday. Thursday, there's going to be 4 items that are going to be coming up. Eurozone rate decision. Nothing's going to change there. Minimum bid rate's not going to move. However, Draghi, in talking about it in his press conference, is going to be talking about the key role that the European Central Bank played in getting the Greece crisis resolved, theoretically, and basically forcing banks to shut down once the negotiations broke down and Greece went into a referendum. This role will be questioned by reporters big time. The markets, perhaps the bigger focus will be on what's going to happen with regard to the quantitative easing. Assuming a deal, the question that will be asked will be, will the European Central Bank go all in into Greek bonds? Will they buy them up in mass to try and increase the Greek, improve the Greek economy, at the same time fulfilling their requirements for their quantitative easing buying. Will quantitative easing be expanded given the repercussions the crisis had on the continent? In addition, the assessment of the bank on inflation and growth developments is also key, even though no forecasts are expected right now. So that's one to pay attention to. In the U.S., unemployment claims are going to be coming in. The number of initial claims for unemployment benefits in the U.S. edged up 15,000 last week, reaching an adjusted 297,000, right here, this number. The reading was much higher than the 274,000 forecast by the analysts, so it came in much more negative than they had expected. The 4-week moving average increased by 4,500 claimants to 275,000, well lower than the 300,000, which is kind of a benchmark that they go by. Anything below that is really in good shape. Continuing claims. Now, see, all of these numbers, they're what are called headline numbers, but they are made up of multiple numbers behind the scenes. This one, for instance, has your unemployment benefit claims, first-time claims. You also have continuing claims. You have 4-week moving averages, et cetera, et cetera. So continuing claims rose by 69,000 claims to a seasonally adjusted 2.33 million people out of work. The unexpected rise can be attributed to layoffs in the auto industry. At this time of the year in the U.S., most auto industries lay people off for up to 2 months for model changeovers. They go from last year's model to and change over the factories to start making next year's models. And so a lot of auto industry employees are laid off for a couple of month period, and these numbers are reflected in these unemployment claims. Number of claims is expected to reach 282,000 this time, which is better than previous. So we will see what happens there. Also in the U.S., we have Philly Fed Manufacturing Index. That's supposed to drop some. Manufacturing conditions in the Philadelphia area had improved in June, rising from 6.7 to 15.2. That's a huge rise. Analysts expected a modest rise to only 8.1. The increase was across the board, and so this time around, they're expecting it to fall back some. Part of this number talks about new orders, and they climbed in June, and paid sub-index surged, and all of the other indices that make this number up had a big improvement last month, but they're expecting a slowdown this month. So again, a number to watch closely. Going on to Friday then. On Friday, it's a full day, even though it is a shortened trading day. It's still got a lot of high-impact items coming out. In Canada, we have the CPI and core CPI. In the U.S., we have CPI and core CPI as well. So the inflation expectation of the market will be highly watched on Friday. You'll notice core CPI in Canada is supposed to drop, as well as the CPI number. In the United States, it's supposed to drop as well. at least the CPI number. The core is supposed to increase a little bit. And the difference in these is certain items that have more volatility to them, so they take them out of the CPI number overall and create something they consider more realistic, less likely to be as volatile. But the fact of the matter is, the core CPI numbers really include those things that most people buy on a regular basis: gasoline, food, etc. So why they take them out is beyond me. Just to come up with a smoother number, apparently. Also, we're going to have building permits, and the only reason for the star is to bring out the fact that there's also housing starts that come out at the same time, and they are both part and parcel of the market, or the housing segment of the economy. Housing is a big one big segment that the FOMC watches, because people who are buying houses and starting new homes are people that have a job and have the money to spend on housing. Since housing is the biggest single purchasing decision most people make, they don't make it lightly. And so the housing starts are supposed to increase here, and but the building permits, which even is an earlier indication of housing starts, is supposed to drop some. So it'll be interesting to see how they come out. This is more of a leading indicator than this one is, because this one is, you have to have a permit before you can build a house. So those two you want to watch in tandem. And then the last item on the list for this week is consumer confidence, which jumped to 96.1 in the final read in June. The rise in confidence was due to solid data released from the job market, and consumer spending surged after wages grew and inflation remained low. Consumer confidence is expected to rise even further this time around. Higher confidence implies more retail sales, but the correlation to that is not always there. So looking forward then to this week, this is the way I see the forecast for the currencies going forward. U.S., and this is my own forecast, so you'll have to look at the market as you see it, but the way I see it is that the dollar is going to be bullish on positive data. The Canadian dollar is going to be bearish, and it's going to be dragged down by oil. And the reason for that is Iran could add a substantial amount of oil to an already overstocked oil reserve in the world. U.S. Last week, U.S. Oil wells, I think it was 10% of them went back online, and that adds to the additional oil that is being pumped. And the OPEC nations are not stopping at all. They're pumping full bore. So we're going to have more oil than demand, and it's going to push the oil price down. And Canada, being a big oil producer, is going to be dragged down with it. Euro is going to be dragged down, and it's bearish by the Greek drama and quantitative easing. The pound is bearish because of debt worries and sentiment in the market. It had a 120 pip drop last week. However, remember I mentioned that on I think it's Tuesday or Wednesday, there's going to be a lot of pound news coming out, and we could see a rally on the pound this week. But my general forecast is a bearish pound. Swiss franc is bearish because it gets dragged around by the euro a lot. Greek drama and intervention. In fact, there was another article that was posted this morning that basically talked about the fact that the governor of the bank of the Swiss National Bank was intervening big time in order to prevent a rise in the value of the Swiss franc. There's way too much money going into the country because of flight to safety, even though they have a negative interest rate. I don't understand that. That is very baffling. But nonetheless, my general trend on the franc is bearish. The Aussie, because of poor economic data, as well as the Kiwi, are both bearish, and Japanese is bullish from the safe haven currency moves and the fact that the economy is actually growing a little bit, however, very slowly.
There we go. Great. Well, I'd like to just thank everyone for being here. And first thing I'd like to do is, before we start with the watch list for today, there's quite a few currencies, which is giving some excellent setups. But I'd just like to do a run through quickly of the ones that we were looking at last week. I'd like to show you some of the trades I took while, and it's really worth paying attention to this watch list, guys. It's really some good pips to be made. And one of the ones I'd like to just show is the New Zealand CAD, which we actually had on the daily. We had divergence, and I put this out as well. And you can see we had a beautiful trade on the break of that outside bar. Everything lining up quite nicely, 4 hour lining up quite nicely there, and there was a great little trade there. So the New Zealand CAD was one really good one. We also had some 4 hour CDC and daily CDC on the New Zealand Swiss. Now, quite important about the New Zealand Swiss is you can add this to your watch list. For the daily, the divergence has been answered, but there is potential for this to actually continue up. So what I'm watching for currently is for this 4 hour fractal to break, with giving me a 5 along going along, and the daily continuing with a little bit of an uptrend. Now, one thing we have to remember here is that the profit-loss ratio won't be that great if you use it to the bottom fractal here. So my profit target will be at this fractal, which is also a weekly support, was give me a weekly resistance area. And I'll look for 1-to-1 and just set a stop loss at a 80 pip stop loss there, and just grab a few pips going up. So New Zealand Swiss still a very good watch list. Looking at the New Zealand yen at that time, on the 4 hour we also had beautiful CDC, and there were some great trades. I unfortunately missed out on this one, but there were some great trades we made right in this area. Up to the previous fractals, there were 123 pips to be grabbed, or even if you just use a trading stop, minus 50, there was 80 to take. So still a nice little watch list that really gave some good pips on that one. And last but not least, New Zealand US dollar. Also 4 hour divergence, which was pointed out. Nice little trade from here onwards. And if you just took it to the fractal, there was 40 or even a little bit higher. There was a nice 60 pip retracement trade against the daily trend. So nice little trades right there. The other ones I'd like to just run past very quickly is the euro pairs. We were looking at those. They were not all giving divergence and convergence, but there were some nice sideways moving patterns. For instance, on this euro Aussie, where it was moving, you can see there was a nice little channel right there. And we said audio alerts top and bottom of this channel, and when it broke out, there was quite a nice little trade right there. I took a 50 pip trading stop, and it took me out. Right at the moment, heads up on this one for 4 hour divergence this time. So you can see higher highs here on this 4 hour. The AO is sloping towards the zero line. We've got a fresh Mayo cross, blue light special, and I took an entry right there. No buy hold or sell recommendations, guys. So a nice little CDC trade at this moment, pulling back, and I think that's also in confirmation what Clark is saying with the euro being bearish. This is confirming that as well. Looking at the daily on the euro Aussie, beautiful rejection candle that we had there as well. Quite important. Here we have potential for divergence. This might actually take another week to develop. But strategy at the moment is as soon as it breaks the top here, that's also a very strong weekly resistance. If we do get fresh signals and the air is actually starting to go above here, which I actually doubt, we might actually consider going long. But for now, bearish, and that's why I'm going to be looking here for below special as well. An early bird to confirm, and I might even start looking for re-entries at the break of these previous lows of the daily. You can see quite nicely. On the 4 hour, I'll even do it right in this area, start looking at the bottom. We just take this other green line away. In this area, I'll start looking to take short entries based off the daily time frame. And as you can see, if you look at the daily, it's quite nice. Sailing waters all the way up. There's quite a few pips there to grab. Looking at the Euro CAD was also a nice little watch list we had last week. Very same scenario. Break of the sideways moving market we had there, and very nice beautiful signals right from there onwards on the 4 hour. Small little trade. I was a bit nervous about going long on the euro, so it didn't take a lot out of this one, but also good watches at the moment due to the bearish momentum we do have on the euro, as well as it breaking at this moment with a fresh move across, pretty light special. And so usually the Euro CAD and the Euro Aussie move quite nicely together, so they do tend to move in each other's footsteps. I took aggressive short on the Euro CAD. Once again, no buy or sell recommendations, guys. But looking at the daily here, the Euro Aussie and the Euro CAD looks pretty similar. Beautiful rejection candle we had there, and this is also giving potential for divergence. Remember, nothing being confirmed yet, but I will be looking for, once again, an early bird, a below special, and if this may have drops below the zero line, I'm going to think twice about going short on this. So maybe for next week, maybe next week we'll get a very good signal going short once again on the Euro or CAD. Now looking at the Euro Yen, that's also one currently at my watch list. But last week we had a bit of a, once again, sideways momentum, and I took a short based on that watch list that we created together on the break of this little outside bar. As you can see, once again, a small little trade, not a lot, 48 pips. It actually stopped out on a trailing stop right there of 50 pips, and actually a good place because it bottomed out and rejected quite nicely. At the moment, this is a big one on my watch list as well. Reason being, audio alert is set on this fractal going short based on what we're seeing on the bearish momentum we have on the euro. But also, this 200 moving average is playing a huge, huge role in this. You can see how it keeps rejecting this 200. So this is giving me, look at the previous left as well. This is quite a significant area of resistance. As you look at the daily as well, Euro Yen is playing there the same. 200 is playing a major role. So this is where I'll go start really looking at what's happening. Once again, strategy at the moment is if it does go below this fractal, I'll definitely go short with a fresh move across. If it goes long, I'd really like to see a very good, decent close above this 400 and it being confirmed with a daily before I continue long, because the last thing I want is to take a long on the break of the 200 and we have a rejection like we're having right now and have to suffer through a retracement. So caution on the Euro Yen. For our great watch list, if we can break out the sideways pattern we have right there. Then looking at the Euro New Zealand, also last week, nice little CDC trade I took last in the, I think it was just before, just before we started with the webinar, and you can see take profit target reached, and I actually did an add-on as well at the same time, and when once broke the fractal again, and a nice little trade, beautiful retracement. It hit a weekly resistance. I'd like to just show that to you quickly. Right there, it couldn't keep above, so at the moment we do have heavy off points of the weekly as well. And looking at the daily at the Euro New Zealand, we still have divergence. So once again, a big watch list for me. I'm waiting for this to give me fresh 5 alarms of the 4 hour and a break of this previous bar or the previous low. You can see on the 4 hour, this is the area I'll be looking to go short once again. Fresh Mayo Cross, preferably a 5 alarm, and I'm going to look for it at least to come to the 200, which is going to serve as lovely support. And once again, you can see there's quite a few pips to grab from there onwards. Last but not least, we also had a look at the Euro US last week. Small little trade. Once again, 50 pip trailing stop loss took me out there. Nice little watch list, breaking of the sideways moving market we had, and 5 alarm, everything looking quite good. Bottomed out, gave a beautiful rally, but just like we just looked at the Euro Yen, here the 200 moving average is playing once again a major role in the 4 hour as serving as resistance. I took aggressive short on this due to the Mayo Cross, the blue light special we have, the break of the outside bar. I'll be looking at this at least to come and retest the bottom lows. And looking at the daily at the moment, it's just moving sideways, so it's actually on the Euro US, looking on the daily side, no real sense of direction. So here I'll be looking at the 4 hour to guide me. And once again, a little bit of aggressive short, but this is definitely going to work out due to the bearish momentum we do experience at the moment on the Euro. Then some other ones we had a look at last week was the Pound Aussie. Now, quite interesting about this one is we looked at daily potential divergence, and you can see it still hasn't been answered. It's still trying to push higher and higher and higher, and that's no trade was taken. Either long or short, you can see it actually starting to just become a nice mess. And if I go to the monthly and I zoom really, really well out, let me just take those lines off. You can see it's actually retesting the fractal and the resistance area we have right over here in 2009. So at the moment we do have potential for a monthly divergence, we have potential for a weekly divergence, and we have potential for a daily divergence. So this is telling me I'm going to be very cautious taking any aggressive longs on this Pound Aussie. So I'm going to be watching this, and once again, as Clark said, bearish on the pound. I do agree with him. And I'm going to even start looking maybe to get in a little bit earlier on the break of this 4 hour fractal. Very important, make sure I've got a below special and Mayo Cross, so I don't think it's going to really materialize. Most probably more the conservative view will to put it at the bottom of these fractals with fresh Mayo Cross, blue light special, and then of course the daily giving me a fresh Mayo Cross as well to confirm the divergence. Looking at the Pound CAD, that was also on a watch list last week. Let's just make sure. Here we go. Yes, 4 hour divergence. There it was. Beautiful higher highs. AO sloping towards the 0 line. Nice little short taken based on the break of that outside bars we had there, and also a nice support area, and a nice little trade all the way down for a few pips. Recovered quite nicely, and at this moment I'm actually just watching the Pound CAD once again. Very similar to the Pound Aussie. Is they're making higher highs, but I'm concerned about this AO showing once again potential for divergence. So a little bit cautious, same with the weekly, potential divergence right there. And I don't think and the monthly, there we go, also potential CDC. So I'm a little bit cautious with taking longs on the pound, guys. And once again, I'm going to be looking for shorts. Watch list is either on the 4 hour fractal right there, or this one right there. So either or, very important, fresh Mayo Cross, blue light special, and we're going to go short. The other one we were looking at last week was the Pound New Zealand. The Pound Yen, excuse me, there we go. Pound Yen was one of those that actually went into congruence quite nicely, beautiful, no CDC there, and I took an entry once again based off a sideways moving pattern that we looked at right in this area. And you can see a breakdown and everything lining up quite nicely for a nice little trade right there. So beautiful little setup there, and you can see on the Pound Yen as well. Reason being is we actually had divergence of the daily, higher highs on the price, AO sloping towards the 0 line, and this was our leg 3, expecting as, or shall I say wave 3, as soon as we get a nice CDC, we're looking for pullback, and we look for continuation. So at the moment on the Pound Yen, tough one at the moment, very important for me that I'm watching as well here is this 200 moving average. It's playing once again a major role on the 400, serving as resistance. So daily at the moment going up quite nicely, but once again no fresh Mayo cross to actually confirm that we are in a trend reversal. So a lot of caution on this one. Our strategy at the moment is, you can see on this 4 hour, there's quite a nice little sideways moving pattern to the left of the screen. I'll be waiting for it to break those resistance areas of the fractals, and then from there take it up to the weekly resistance, and there's quite a few pips. But once again, very important, it has to close above this 200 moving average. Otherwise, we might just have, you can see, start to reject this at the moment, and for all we know, it might actually just start going down all the way and come and retest the bottom of the sideways little channel we have forming right there. Another little trade, let me just see which was the other ones we had. New Zealand also gave 4 hour divergence. There it is. Once again last week, higher highs, AU sloping towards the 0 line, and right in this area went nice and short and closed out a little bit prematurely, but closed out on that little fractal, and a nice little trade there as well. Bottomed out on the weekly support beautifully at the moment, pulling back. And for me, watch list, based on the bearish size, I'm going to look for a fractal going short, break of this support area, supported by fresh Mayo cross plus special. Looking at the daily as well, we do have divergence there. We have our wave 1 or leg 1 down, bit of a ranging, and I'm sure it's going to actually continue down. So this is also a good area if you're going to look at the daily. Start looking for aggressive shorts from here onwards. So 2 ways to trade this. 4 hour, I'll be looking for shorts right in this area already at the top green line. Longer term, looking at the daily, I'll be looking at the daily support area where that fractal is, and start going short from there onwards. And there's quite a few pips there on that daily to be grabbed. So eyes open on this pound New Zealand. Some other ones we took last week was the Aussie Swiss. We looked at that one. Now, quite important about the Aussie Swiss was last week we actually didn't have divergence or convergence. So we're looking at trading this out of a sideways moving pattern. You can see I actually climbed in. I think my spread actually covered this a little bit. Got in on this one. Just took a few pips. Unfortunately, 50 pip trading stop took me out for very little. But still a bit made there. Nothing lost, that's the important thing. But good watch list at this moment as well. It is trying to recover a little bit. We got convergence, lower lows on the price, AU moving towards the 0 line. We've got a fresh Mayo cross, a blue light special. So I'll be waiting for this to actually break these fractals, the top, and have a run up to that 200 moving average at least for resistance. But looking at the 1 hour, yeah, I think that's what we'll do. Set an order at the top there. What we can also do is, due to the bearish momentum we do have on the Aussie, set an order at the bottom of this fractal we have of the 4 hour. Nice sideways channel we have since last week actually. You can see it didn't really break convincingly over this, never could close really in a good manner. So good if watch list for the higher time frames once it breaks out of the sideways pattern we have. The Aussie yen was also one we had on our watch list last week. Once again, nice little trade taken there. And this one I actually closed manually once I saw it pulling back. And also once again, nice little trade there. Important about this one is looking at the daily. Everything looked good. Beautiful recovery we had when once it hits a monthly resistance, support the bottom. At the moment, strategy on this one is, once again, just be very patient. Order alert top and bottom. There's a nice little channel right there, or if you want to be conservative, put it up a little bit higher. Set order alert top and bottom, and once again, if you could trade against this 4 hour trend, guys, make sure everything lines up with a 5 alarm going long. Or what I'd like to do preferably is wait for it to break the support area, Mayo cross, and blue light special, and off we go. Looking at the Aussie New Zealand, that was also a 4 hour watch list last week. Once again, a neat little trade taken on the break of those fractals. And at the moment, quite amazingly to see how it came down and tested this 4 hour support, 200 moving average. Currently moving quite nicely sideways. Audio alert set, top and bottom of this. And we just have to be very patient, wait for breakout. Very important though, remember, of this 4 hour, look for fresh Mayo cross, look for a saddle sell, and very important also, wait for it to close below this 200 moving average convincingly before taking that. Looking at the daily as well, quite important on this Aussie New Zealand longer term wise, we actually had beautiful divergence, higher highs. Look at this AO sloping towards the zero line. That was also a reason why I took this trade. Beautiful CDC, and at this moment this is an area you can see, we just take that green line away as well. You can see 1, 2, 3 times been tested, so once again from here onwards I'm going to be looking to go short. If the daily confirms all the way to the 200 is going to be the way to go, and there's quite a few there as well. So heads up on the large time frames with focusing on the 4-hour for good breakouts and good entry signals. Second last one we had a look at last week is the Aussie US dollar. I missed on any trades we had last week there, but once again you can see we just put the lines there. There was a nice little sideways pattern forming. There we go, and there was a break with a saddle sell Mayo below, and even there you see there was about 92 pips minus 50 pip trading stop. Looking about 42 pips you could have taken out of that. Currently, quite important about this, daily is starting to slope out a little bit, losing a bit of momentum. So watch this material once again, base of the 4-hour, nice sideways pattern forming right there. Order lid set top and bottom, and wait for breakouts. Very important. Saddle sell, fresh Mayo cross, and everything else to just give us a heads up on that one. And last not least, what we had last week was the US yen. Nice little CDC trade based off the weekly. Very important. Weekly gave us divergence, higher highs, AO sloping towards the zero line. We had the fresh Mayo cross, which is a big heads up, and I took aggressive short on that. Actually based off the 4-hour, I think it was. There we go. 4-hour fractal, and down we go. So a nice little CDC trade right there. Quite amazingly, once again, it came up, is found resistance at the moment on this 200 moving average of the 4-hour, and once again I'll be looking for shorts here based on this weekly. This weekly is not finished yet, so this is going to continue down, but if we pull back right now, but it's definitely going to come and retest the bottom of this weekly support we have right here. So heads up on this one for aggressive shorts either of the 4-hour with a break there. Once again, same trading rules, Mayo below, AO red, and also looking at the daily, I'll be looking just for this Mayo to start strengthening again, pulling away to the bottom of the zero line. Good. So looking at what else we have as watch lists for today, I'm going to just run from them alphabetically. Some of them we've covered, but let's just run through them once again. Aussie CAD at the moment is a lovely mess. Excuse me. There we go. It's a lovely mess on the daily. Difficult to trade and not one I would really recommend. But if you look at the weekly on this one, you can see 1, 2, 3 weeks ago we had a beautiful channel starting to form, and this is where I'll be starting to look for potential shorts. Otherwise I really wouldn't bother with the Aussie CAD. Fractal set top and bottom of that beautiful wick we have, or the beautiful candle, and from there I'll be waiting for breakouts and only trade then accordingly. Looking at the Aussie Swiss, quite important, I think. Now we have, yes, here we go, 4-hour, that's showing divergence, lower lows, AOs up towards the zero line, order lid set for now on this 4-hour, top of the fractals here, looking for potential longs, at least at 200. There's a 50 pip, trade there, so nice little retracement trade, but be careful guys, against the trend, half a lot of what you would usually trade, or half the position, excuse me, you usually trade. Also New Zealand is a nice one to trade at the moment, like I pointed out before, for our channel, and at the moment just waiting for breakouts either or, and the Mayo and the AO would tell us which direction we're going to take on those. Preferably for me would be to the short side. Looking at the Aussie US dollar, same channel is starting to form there, top and bottom order lids. You can see we have a subtle sell right there at the moment on this 4-hour, fresh Mayo cross. It might actually be a good little trade, but once again it's only about 27, 28, 29 pips to the bottom fractal. And the last thing I want is for this to go down in my favor and then push up and come and close me out on my stop loss top. So I'd rather wait for this, give up the 29 pips, because I know if I look at the daily or the weekly in this case, there's quite a few way to go. There's about 100 pips to go there still before we hit the monthly. So good one to watch and patience required. CAD Swiss at the moment is a big one on my watch list. Now this one we didn't have last week, but once again potential convergence here. Got lower lows of the daily. I was slipping towards the zero line. Now very important is the CDC has not been confirmed yet. Confirmed is once it turns to a blind special with a fresh Mayo cross. So once again, fractal right there. Audio alert will be set and I'll be looking from there onwards for a nice retracement trade. There's quite a bit of hiccups there, but potential is there. So let's keep an eye on the CAD Swiss for now based on the daily. Next watchlist candidate is Swiss yen. Now I know this is a lot of data, guys, but this is what I'm looking at the moment. Weekly is a mega big exclamation mark behind it due to the fresh Mayo cross we had. Now the power of this Mayo is incredibly important. You can see every time it crosses above, there was a huge surge. Crosses below, huge surge. Crossed above, excuse me, huge surge. So never underestimate the power of this Mayo cross. Together we've got a below special as well, confirming that, and although the daily is at the moment pulling back, I'll be looking to get short at least in this area where the bottom fractal is, or what we'll do is look at the 4 hour. You can see 4 hours giving some nice little possibilities as well. Maybe get a little bit earlier based on what the weekly is telling us. I'll be looking at this 4 hour fresh Mayo cross below special. Down we go, at least to the bottom here. Maybe get out and get back in once it breaks the bottom the bottom fractal right here, where this little peach color line is. Good. Let's look at the Euro Aussie at the moment. We did already, but the 4 hours giving us divergence. Like I said, currently pulling back a little bit. So this is still going to go down all the way at least to the fractal right there. So good little watch list at the moment. Same with the Euro CAD 4 hour daily as well. 4 hour once again. Let me see. No, sorry. This one, the daily, is quite important. My apologies. Daily's divergence, higher highs. AA slipping towards the zero line. So once again, I'll be looking here for below specials to confirm and then take an entry. Aggressive shorts at the moment would be if you start looking at, there we go, cancel that one. At the lime color line we do have there, if that breaks, with the daily giving me a heads up, I'll be looking to get in an aggressive short right there. So heads up on the Euro CAD. The Euro New Zealand is the next one on my watch list for now. Once again, daily is giving us potential for divergence, and I'm looking for a break of this support area we already looked at before, and once again looking for the 4 hour to confirm that. Next one is the Pound Aussie. Pound Aussie is giving daily CDC, like I said before. It's actually hit a monthly resistance line. Weekly also potential, monthly potential, so a big exclamation mark on this one as well. What we can even do if you want to be aggressive, 4 hour is actually starting to form a nice little fractal to the downside. Set an order alert there, and you can get in there on good proper signals. Looking at the Pound CAD, as we know, they move hand in hand. Once again, daily divergence, weekly potential, monthly is diverging. So 4 hour, we can start looking at the break of this fractal for potential shorts to go down. Quite important as well is if this does go, the daily, if it does go above the zero line, and we do give a subtle buy, quite important is that I'm going to be waiting for a pullback, form of a fractal, maybe of the 4 hour going high, and then from there go on long. So that's just one thing I'd like to point out on this one. The next one on my list is the pound Swiss. Quite important about this one is 200 moving average is serving on the daily as quite nice resistance at the moment. Looking at the 4 hour, that is pulling back quite nicely as well, but my main frame is this daily, so caution advice on this one. You can see there on the daily I've actually drawn a peach color line and a green color line, a nice sideways moving market we have there, so you can always range trade it. If you do get some good confirmation, maybe sell the top, buy the bottom, and if you look at the weekly you can see a nice sideways moving market we have there as well. So at the moment we actually are at the top of a big huge weekly channel, so just heads up on that one. Very important if you're going to go long on this. So we do get a fresh 5 alarm on here, and we do have a break of this fractal. Close above the 200 moving average is essential, guys, and then from there, if everything lines up with the daily, I will consider going long as well. Next one on my watch list is the pound New Zealand. Once again, like I said, daily at the moment we had divergence. This is our first down. We're waiting for a pullback. I'm going to wait for a continuation downwards. So once again, aggressive shorts will be set of the 4 hour fractal, but we do have otherwise at the bottom of the fractal we do have on the daily. Let me see. Here we go. That's where I will start looking for on the daily for some nice pullbacks and a nice downward move. Looking at the New Zealand CAD, almost done, guys. Here we go. New Zealand CAD, that was based off the daily, very similar. Once again, we have here convergence, lower lows of the price, AO sloping towards the 0 line, and I'm looking for aggressive longs as soon as it breaks this area. Once again, as we know with CDC, up wave, pullback, continuation. So once again, this is going to be a big area I'm going to be watching. 4 hour has to confirm though. At the moment you can see it's just ranging. So nice little watch this on the New Zealand CAD. Same with the New Zealand Swiss, very similar. CDC right there. And where this green line is, if we go to the 4 hour, I can see quite nicely. That's a nice fractal area. From here onwards, I'll start looking for potential longs. And based on the daily, you can see up, we're going down, we're going to go up once again, retest at least where the peach color line is. Good. And then 2 more, US dollar Swiss is the next one on my list. We see why. Okay, weekly Mayo cross. Here we go. We'll have a look at this one. Big exclamation mark as well from my side. It's crossing above the 0 line on the Mayo, blue light special, everything confirming, but I really like to see it break this fractal. If it breaks that fractal, I'm going to go long on this one, and at least to come and retest. There's a fractal right there, so quite a few pips there to grab off the weekly. But of course, you can see as well, quite interesting, is how the daily 200 moving average is coming at the same area of where that weekly fractal is. That's our daily 200, and how that's been serving as resistance for the last couple of days, so or the last couple of weeks even. So quite important, this has to break and it has to close above that. I'd like to see a settle buy. I'd like to see a bit more confirmation on the Mayo, preferably the 5 alarm of the 4 hour, and we're going to go long on this one. And last but not least, the US dollar yen. Here I'm looking for potential shorts to continue. Once again, like I said, this weekly move is not over with. We had this divergence, and at the moment pulling back, and I'm going to be looking to take more aggressive shorts, preferably the break of actually the previous low that we had. But let's look at the daily. That's moving up quite nicely, and 4 hour pulling back as well. But once again, you can see I was battling with this 200. So very cautious with this. What you can do is even for now, there's a nice sideways moving market starting to form, and see if you can get some good signals on the break of this 4 hour resistance, or when we do have the support. Yeah, and that's basically it. That's wrap up. There's just one more I'd like to do if you do like to trade gold. Gold gave a beautiful trade as well last week, and at the moment I'm watching this with a lot of interest. If it does break the double bottom we have of the weekly, I'll be considering taking shorts as well. Maybe below, AS red, everything is giving a nice heads up. And looking at the daily, we do have actually a settle sell. This is by itself not enough ground for me to climb in. I'd really love to see a nice confirmation. Last thing I want, how much is this? 37 pips to the bottom here. It's just not worth it. I'd like to rather wait. And last thing I want is once again to try and pick a bottom and sell a top. So let's see what's going to happen on that one. Good. So let me see. Do I have any questions? And question is, are you setting your stop loss at the fractal of the higher time frame? Yes, I do. I prefer to set stop losses at the higher time frame. A year in New Zealand is probably a good example. As you can see, this was the 4-hour CDC, and I used the higher time frame just to make sure you can see how close it came. So if I did put, I actually used a fractal plus my spread. Otherwise, this would have stopped me out, and I would probably jumping up and down or running around my desk, because it actually went in the direction I've been hoping, or I've been looking to trade this. So yes, I do trade off the higher time frame depending on where my setup time frame is. 4-hour here, 4-hour stop loss. If I take it off the daily, like for instance the pound yen, I think, no, which one was it? The US yen. Here we go, and stop loss. Okay, I think that would have been at the top fractal right there. So that's quite important. Daily was giving me good entries. So from there onwards, stop loss always at the top.
Okay, one question that I had is, you showed us a lot of trades you'd taken. Did you do a total of the pips you took out of those trades?
Yes, I did, but I actually took some other ones which was not on my watch list. I'm not sure how much these were all in total, to be honest, Kirk. I've got a weekly tally though, but this was about 150 on the US yen.
You can just give us your weekly total. We'll be fine.
Okay. It was 1,200, but it was a good week. The market was very generous this week.
And then if you those other trades you saw, you're probably going to net on the watch list portion, probably over 800, between 800 and 1,000 were on your watch list.
Mm-hmm. That's true.
Okay. The other thing that I'm able to report is, if you haven't heard, Jed made on the watch list, because he's only trading part of the week, he made over 600 pips in the first 2 or 3 days of the week based on the watch list. Those are the only ones that I have records of as to what took place because of the watch list. So the watch list is an extremely important tool that is available to you. Now, I suggested to Clark and Natalie to just go at whatever pace they felt comfortable doing, and I know it's too fast to catch all the detail. You need to take the video, stop it wherever you want to, draw lines on your charts and make notes, and then pick it up again. So if you see things that you would like to take those in addition. This is just a watch list from one perspective, even though it happens to be a good perspective. There's so much information here that you're not going to be able to catch it. If we slowed it down, you'd be falling asleep and bored by the time we got through with it. By going fast, then we can get it in a short period of time, and you can go back and review it to glean the information. The information is going to be good for a few days, and then towards Thursday or Friday, most of those trades will have been hit, and it won't be as valuable, other than it's good research and study material. You say, oh yes, that one did hit, this is what it did. And so it becomes study material. I don't know how many more weeks Jed is going to allow this to go as a gratuity or a free webinar. It in the very near future will be a pay-per-view. You'll have to pay to watch it and to have that information. That'll save you hours and hours of time doing that research yourself, and you'll learn how to trade more quickly by watching this. So I'm excited about that. The news that Clark gave you direction. Even Natalie's mentioned about the direction of the news, helping her to decide which direction she may want to put a bias on in her watch list.
I see there's a question I'd like to just address quickly, Kirk. And that is, you will see Clark's been very generous with adding in the handouts. You'll find the currency pair volatility as well as activated forex news. please download the guides. It really saves a lot of time. I've attached a weekly AA, which is based off weekly and monthly support and resistance areas. And there is a question asking if it's based on last week or the coming week. What it is you will see on my screen, mainly I will set out support and resistance areas based on the weekly or the monthly, and wherever these are, you know that's the high time frames which are hit. For instance, on the students, you'll see if I go to the monthly, this is a monthly area which was hit and a weekly resistance area. So it's basically a combination of both, but it's what we're seeing currently at the moment. So I always have them as well as a different alert than my normal daily alerts. So you know that when it does get broken, that's quite a major area to give attention to.
So the darker color is your monthly, that's a maroon color, and the peach color is your weekly?
Yes, there we go. M for monthly, M for maroon. There's actually supposed to be a W for weekly for white, but because my separation bars are, or separation is white, it's going to be confusing, so I've just made a peach color line.